A new battlefield has opened in the 21st century, one not fought with tanks or missiles, but with microchips. At the center of this war sits Nvidia, the American giant whose semiconductors power everything from gaming rigs to the most advanced artificial intelligence models. And tonight, it faces its greatest challenge yet, not from rivals in Silicon Valley, but from Beijing, because while the headlines say China dropped its antitrust case against Google, the real story is that regulators have shifted their full attention to Nvidia. What looks like a business dispute is, in reality, a geopolitical clash over who controls the future of AI. China's message is clear: no more dependence. Reports from Financial Times confirm that Chinese regulators are accusing Nvidia of abusing market dominance, especially after its acquisition of Mellanox in 2020. And it isn't just a legal maneuver. Beijing has instructed Chinese tech firms, including giants like ByteDance and Alibaba, to stop buying Nvidia's high-end RTX Pro 6000D chips. That directive alone could cut billions from Nvidia's future sales. But it isn't just about money. It is about leverage. China is signaling to the United States, "We will not remain hostage to your technology." At the same time, Huawei is quietly staging a comeback. At its Connect conference in Shenzhen, executives laid out a roadmap for domestic chips, the Ascend 910, the 970, and beyond. They revealed plans for massive superpods AI computing clusters built entirely from domestic accelerators. They showed slides boasting about advances in interconnect technology, memory bandwidth, and AI frameworks optimized for Chinese hardware. The point was unmistakable. Huawei, once crippled by US sanctions, is back in the game, and it is positioning itself as China's Nvidia. To understand why this matters, we have to step back. The last decade has seen AI rise from research labs to daily life, powering chatbots, self-driving cars, financial systems, and even military simulations. Every leap in AI depends on compute power, and that compute power comes from chips. Nvidia's GPUs are the gold standard. In fact, more than 80% of large AI models trained in 2024 relied on Nvidia hardware. Whoever controls these chips doesn't just control a market, they control the pace of human innovation. The US government knows this. That's why Washington has placed strict export controls on Nvidia's most advanced GPUs, banning their sale to China. The aim is to slow Beijing's AI ambitions, to keep America ahead in the race for technological dominance. But China has responded with the one tool America cannot sanction: domestic ambition, massive subsidies, billions in state investment, incentives for startups, university partnerships, and national pride. Every time Washington raises the walls, Beijing builds a new ladder. And here lies the danger. Because for every restriction there is a consequence. When Nvidia loses access to the Chinese market, it hurts revenue. When Chinese companies are banned from buying Nvidia hardware, they are pushed faster toward domestic alternatives. In the short term, China suffers. In the long term, the US may have created its own competitor. Just as the Soviet Union pushed the US into the space race, America's restrictions may have pushed China into a chip race it cannot afford to lose. This isn't just theory. It is happening already. Huawei's Ascend chips, though still behind Nvidia in performance, are rapidly improving. Chinese engineers are learning to optimize software to squeeze more power out of weaker hardware. Domestic cloud providers are integrating local accelerators into data centers. Even ByteDance, the company behind TikTok, is building AI labs on Chinese hardware, training large models without Nvidia's blessing. The question isn't whether China can catch up. The question is how quickly, and if the US has underestimated Beijing's ability to scale. History shows that nations under pressure innovate faster. Japan after World War II, South Korea in the 1980s, even China itself after the WTO accession. What looked impossible became reality in a single generation. Tonight, Nvidia stands not just as a company, but as a symbol of America's technological edge. China, by targeting it, is saying, "We are ready to challenge that edge. We are ready to take the risk, and we are ready to pay the price." For Washington, this is no longer a commercial dispute. It is a strategic warning. For the rest of the world, it is a signal that the next great war may not be fought over oil, land, or ideology, but over chips smaller than a fingernail. And yet, this is only the beginning, because what starts as antitrust cases and export controls is already morphing into something larger, a contest of economies, alliances, and national security. The battlefield has been drawn. The players have taken their positions. The only question is, How far will they go before the first true shot in this chip war is fired? The chip war is not fought in a single arena. It unfolds across boardrooms, supply chains, courtrooms, and even shipping routes. Each move by Washington prompts a counter from Beijing, and each counter from Beijing forces Washington to double down. The result is a spiral of escalation that stretches far beyond Nvidia's quarterly reports. It touches the very foundations of the global economy. After banning China from purchasing its top-tier AI chips, the US hoped to slow down Beijing's research into large language models and military AI, but sanctions rarely freeze ambition. They redirect it. Within months, Chinese firms announced massive procurement drives for domestic silicon. Huawei doubled its chip research staff. Baidu and Alibaba pooled resources to develop training clusters on whatever hardware they could secure. ByteDance pushed its engineers to optimize code so that less powerful chips could train models more efficiently. In short, instead of giving up, China innovated under pressure. For Nvidia, the result is paradoxical. The company holds nearly 80% of the global AI accelerator market, yet one of its largest potential customers is now legally restricted from buying its best products. Sales projections to China fell, investors worried, and share volatility spiked. Analysts warned that if China succeeds in producing a viable domestic alternative, Nvidia's grip could weaken permanently. And this isn't just about one company. It's about America's ability to set the pace of global technology. Meanwhile, Washington passed the CHIPS and Science Act, promising subsidies for semiconductor fabs on US soil. The logic was simple: reduce reliance on Taiwan and South Korea, the current giants of fabrication. But building fabs takes years, and in the meantime, the West still relies on fragile global supply chains. A single earthquake in Taiwan or shipping disruption in the South China Sea could bring entire industries to a halt. Policymakers know it, and markets price that risk daily. Allies have been drawn into this war whether they like it or not. The Netherlands, home to ASML, the only company capable of making extreme ultraviolet lithography machines, has been pressured by Washington to stop selling to China. Japan has restricted exports of critical chemicals used in chip production. South Korea, caught between its economic reliance on China and its security reliance on the US, faces impossible choices. For Seoul, every decision risks retaliation from one side or disappointment from the other. In Europe, leaders worried that their technology sectors could be collateral damage. Already, some European banks and cloud providers complain about higher costs as AI demand surges while chip supplies shrink. The EU debates whether to follow Washington's lead in tightening restrictions or to carve out its own middle path. But neutrality in a chip war is an illusion. The moment one bloc restricts supply, the other bloc views neutrality as alignment with its enemy. Markets reflect this tension with brutal clarity. Semiconductor stocks swing wildly on rumors of new restrictions. Oil traders, strangely enough, also keep one eye on chips, because disruptions in AI training capacity affect forecasts for automation, logistics, and even energy demand. Analysts at investment banks now treat semiconductors the way they once treated oil, as the single most strategic commodity in the world. Ordinary consumers may not follow the details, but they will feel the effects. Cloud services inch up in price. Smartphone launches are delayed. Gaming consoles cost more. Even medical imaging equipment and electric vehicles, which depend heavily on high-performance chips, face shortages. The chip war is no longer a story for policy wonks or engineers. It is a story for families, businesses, and entire nations. And still, the spiral continues. Each new restriction by the US accelerates China's push for self-reliance. Each new innovation by China convinces Washington that even harsher restrictions are necessary. In this feedback loop, neither side wins quickly, but both sides risk long-term losses. Because a fragmented tech ecosystem, one where East and West run on incompatible hardware and software stacks, doesn't just slow innovation, it divides the world itself. That division is beginning to show. Trade talks between Washington and Beijing increasingly break down over technology clauses. Chinese diplomats accuse the US of tech containment. American officials counter that they are protecting national security. Both narratives fuel domestic support, and both make compromise politically toxic. Once again, technology becomes the front line of geopolitics. This is no longer simply about Nvidia's sales or Huawei's product roadmap. It is about control of the infrastructure that will define the 21st century. Whoever wins the chip war wins the power to set the pace of AI automation and digital economies. and whoever falls behind risks not just slower growth, but strategic arrest. The chip war may have started as a trade dispute, but it is morphing into something far larger. Because when technology becomes the core of national security, every tool is suddenly fair game. Washington's export controls and Beijing's retaliations are only the first shots. The next wave could unfold in cyberspace, where attribution is murky and escalation is easy to deny. Imagine a sudden outage in Silicon Valley data centers, traced back to malware linked to state-sponsored groups in East Asia, or a coordinated phishing campaign, hitting US chip suppliers, slowing their operations just enough to cause delays in sensitive deliveries. These scenarios may sound like the plot of a thriller, but cybersecurity firms already report heightened probing of critical infrastructure. In a chip war, slowing down the other side by even weeks can tilt the balance of research, giving one nation a strategic edge. For the United States, the nightmare is twofold. First, the possibility of Chinese cyber groups targeting financial systems, echoing the 2021 Colonial Pipeline attack that disrupted fuel supplies across the East Coast. Second, the chance that chip supply disruptions ripple into defense systems, because AI isn't just about social media and cloud computing, it's about missile guidance, satellite analysis, and battlefield automation. If chips are compromised or delayed, the Pentagon's long-term planning is at risk. Europe faces its own vulnerabilities. Dependent on both US technology and Chinese markets, the EU risks being squeezed from both ends. If it aligns too closely with Washington, Beijing could restrict access to its vast consumer base and retaliate against European firms. If it seeks neutrality, Washington may view it as undermining Allied strategy. Already, the Netherlands ASML has become a pawn, pressured to cut sales of advanced lithography tools to China. In Berlin and Paris, debates rage. Is it wiser to secure the alliance with America or to maintain commercial lifelines with Beijing? Either way, neutrality is disappearing. Russia, meanwhile, sees opportunity. Sanctioned and isolated, Moscow frames the chip war as proof of Western hypocrisy. State media declared that the US preaches free markets but practices control. Russian officials whisper offers of partnership to Beijing, hoping to leverage their own technology base and gain access to Chinese AI developments. If this axis deepens, the chip war could accelerate geopolitical realignments already underway. Back in the United States, the impact lands not only in Washington boardrooms, but in households. Supply chain shocks, push-up costs, cloud subscriptions rise, software updates lag, new phones take longer to release. Even automakers struggle, because electric vehicles are essentially computers on wheels, and they too depend on advanced chips. Ordinary families may not care about Nvidia's quarterly earnings, but they will care when their bills rise and their devices fall behind. And beyond the economics lies the psychology. The realization that something as small as a semiconductor can hold entire nations hostage is unsettling. For decades, Americans believed that security threats would come from missiles or armies. Now they discover that a single chip shortage can disrupt their hospitals, schools, banks, and even entertainment. This erodes trust in globalization, feeding nationalism and protectionist politics. The bigger danger is fragmentation. If the world splits into two incompatible tech ecosystems, one US-led, one China-led, innovation slows, costs rise, and mistrust deepens. Cross-border collaboration shrinks. Scientific conferences become political minefields. Even the internet itself risks balkanization, with incompatible standards making global communication harder. A divided digital world is not just inefficient, it is unstable. And yet, leaders on both sides continue down this path, because neither Washington nor Beijing can afford to appear weak. For America, backing down means losing technological leadership, and with it, military and economic leverage. For China, retreat means accepting permanent subordination in the digital future. Both see this as existential. And when nations believe survival is at stake, compromise becomes nearly impossible. So here we are. Nvidia, once a company known mostly to gamers and engineers, has become a symbol of national power. Huawei, once crippled by sanctions, is rising as a standard-bearer of China's resilience. Governments, corporations, and consumers all find themselves trapped in a war that was never declared but is already underway. The closing question is sobering. If the chip war is this intense now, with trade bans and cyber probes, what happens when the stakes rise further? Could a single cyber attack, a miscalculated restriction, or a supply chain disruption trigger the digital equivalent of a Cuban Missile Crisis? Could the world stumble not into a shooting war, but into a tech war that destabilizes everything from economies to daily life? The lesson of history is clear. Wars rarely begin with fanfare. They begin with patterns, escalations, and choices that leaders believe they can control, until suddenly they cannot. The chip war has all the hallmarks of such a trajectory, and unless restraint is found soon, the battle over semiconductors may shape not just markets, but the fate of nations in the decades to come. Stay informed, stay prepared, stay alert, because in this war, every device in your hand, every app you open, and every chip in your life is already part of the battlefield.